Alright, so real talk. I've been swing trading for 5 years now, making thousands of dollars every single month, using the same exact strategy that I'm about to show you. And before you think I'm some guru trying to sell you the dream, I'm not. I've had losing trades, I've messed up my risk management, messed up my psychology, I've done all the silly stuff that you're probably doing right now. But once I actually stuck with this process and finally understood it, everything changed. So in this video, I'll be walking you through my exact framework, the one I use to identify high probability swing setups without staring at the charts all day. And here's the best part. You don't need a crazy setup. You don't need 5 monitors. All you need is this and a process that I'm about to show you. Let's get right into it.
First thing, why swing trading and why do I only focus on the higher time frames? Most people think trading means being glued to the charts 8 hours a day, staring at the 5-minute chart, getting stressed over every little move. That's day trading, and honestly, it's exhausting. Swing trading is completely different. I'm looking at the weekly time frame, the daily, and the 4-hour. And why these higher time frames? Because the higher time frames dictate the direction of price. Have you ever heard the saying, the trend is your friend? That's essentially what we're doing. We're using the higher time frames to help us and give us a higher probability and chance of actually winning the trade because we're trading with the trend. I'll show you an example. The difference between the 30-minute time frame and the weekly time frame is the 30-minute time frame is changing from bullish to bearish, from bullish to bearish, and it continues to do that, making it extremely hard to hold positions. But on the weekly time frame, we have very clear market structure, okay? We're staying bullish, then we're shifting. Like, it takes such a long time for the weekly time frames to shift structure because they're so significant and each candle is worth 1 week. So my entry strategy is built on this: weekly time frame for the overall direction, daily time frame for confirmation, and 4-hour time frame for entry and timing. That's the foundation. Everything else is built around those 3 time frames. Step number 1 is identifying the trend. I do this on the weekly, daily, and 4-hour time frame. And I know it sounds basic, but a lot of people actually get this wrong. Let me show you an example. All you have to do is simply find yourself a high and your low, okay? Ideally, you don't want to go all the way back. You want to kind of stay in the middle of the chart, and you don't want to start exactly where price currently is because you won't be able to know, do we break above, do we break below, which I will go through in a second. So the first thing is find yourself a high, find yourself a low. So if this is our low, this is our high. All we have to do is grab our line, draw it at the high, at the body of the high, very crucial, and at the body of the low, and simply wait and see if price manages to break above the high or below the low, okay? Super crucial to remember, a bullish market has high highs and high lows, and a bearish market has lower lows and lower highs. Continue with our example. Did price break below our low? No. Did price break above? We did. One thing I want to mention is a lot of people get confused by this point right here. Anything within our high and our low is simply market structure, okay? This is extremely crucial because people sometimes forget and they think, oh, this is our higher high, this is higher low, whatever they name it. They sadly get it wrong because we haven't done anything. We haven't body closed above, we haven't body closed below. This is just simply market structure. Now, at this point right here, we have body closed above, creating a high high. The reason it's called a high high is simply because it's closed above the previous high. However, as we mentioned previously, a bullish market has high highs and higher lows. We cannot just be bullish with a simple high high. We need to find our higher low. So all we have to do is grab our brush, keep walking. We're essentially creating a path until we run out of a path to walk on and we physically have to change direction. That is where our higher low goes. And as you can see, previously it was market structure, okay? But because we have officially gone past that point and created a new higher high, this market structure changes to a higher low. So at this point, we are bullish, okay? Because obviously bullish has high highs and high lows, and that's exactly what we have, a high high and a high low. Then all we do is we can get rid of this path to keep it fresh. We simply adjust our lines to the most recent high and most recent low and do the same exact thing, okay? Do we break above or do we break below? We do nothing, okay? Which means at this current moment, we are bullish. Now, let's take a look at a different example. Again, all we have to do is find ourselves a high and find ourselves a low, okay? All we do, again, next step, grab our line, draw it at our high and draw it at our low. If you remember from the previous example, this area is nothing, okay? We haven't broken above and body close. This is very crucial. Wicks do not count. We will go through this on an actual chart example, but we have not body closed above, we have not body closed below at this point right here, which means that this is again simply market structure. However, if we continue our analysis, we can see that we have actually closed below our low, which means that this area becomes a lower low. Same exact thing, just flipped. The reason it's a lower low is because it's closed below the low. It's really that. It's really simple. You don't have to overcomplicate that. But once again, a bearish market does have lower lows and lower highs. So the same way as we were looking at a bullish example, we need to find our lower high. We can't just be bearish with just a lower low. So same exact thing. We grab our brush, keep walking. The moment we no longer have a path to walk on and have to change direction, that is where our lower high goes. Again, same exact thing. Because this used to be market structure, it is now changing to a lower high. And again, what the next step is simply adjusting our lines to our current low and our current high, and we simply wait and see what price decides to do next, right? We do this on all three time frames, weekly, daily, and 4 hour, in order to help us identify which direction price is actually heading to and what we're going to do next.
Now real quick, if you're watching this and thinking, okay, I get the framework, but I want the exact entries and live analysis, I break all of that down in my community, including my exact confirmation checklist, trade management, and trade breakdowns. The link is in the description if you want to check it out. I don't keep it open all the time, so if it's available, I would grab it. But even if you don't join, what I'm teaching you right now will put you ahead of most traders. Let's keep going to the entry process.
Now let me show you a real life example. Obviously, as you know, starting on the weekly time frame, all we have to do is the same exact thing we did on the line chart, apart from we're actually doing it with the candles. So the same thing applies. We start by finding our high and our low. Now, all we do is grab our line, draw a line at our high, and draw a line at our low. All we have to do is wait and see if we body close above our high or body close below our low, okay? This wicks do not count as a shift or structure, okay? It has to be a body in order for it to be valid. A lot of people also get confused at the fact that they see price shifting up and they look and they think, oh my gosh, we've actually shifted higher, which means that we've body closed above our high. However, you have to look at the very first thing that happens. If you didn't have all this price action here and all you could see was this, what did we do first? We actually ended up breaking below first, right? I know you can see further into the future, but that's the key here. We have to go step by step by step. A lot of people jump the gun and they get a little bit confused. They're like, okay, I'm going to jump from step 1 to step 10 right away, and then they get confused. They're like, oh, why did I lose this trade? It's because they're rushing into things. So all you have to do we break above, do we break below? In this instance, the first thing that we did was body close below, which means that this area becomes our lower low. Same exact thing, we know the drill. It is simply because we have closed below the previous low. Reminder, bullish markets have higher highs and higher lows, and bearish markets have lower lows and lower highs. So we could potentially be bearish because we have a lower low here. However, we don't have a lower high. But how do we find that? Grab our brush, keep walking. The moment we no longer have a path to walk on and have to change direction is where we find our lower high. Also, I do want to mention this because sometimes our lower high could be in the same exact place our previous high was. Don't get worried about that. It just happens. Sometimes it is, sometimes it isn't. It depends on the example. In this instance, it is. So we can change this high to a lower high. At this current moment, we are bearish, right? But we're still not done with our analysis, so we need to continue to go on. This line can stay here because we're in the same exact zone as our previous high. However, we do have to adjust to move it to our most recent and valid lower low. So then again, do we break below? We do not break below. However, do we end up body closing above? We do. So all we have to do is simply circle the zone that we body closed above, since this is now our new higher high. Okay, so we've just gone from being bearish, right, with low lows, lower highs, to now shifting bullish, okay, because we have closed above our high. So since this is our high, same exact thing applies. We grab our brush, keep walking. The moment we run out of path and no longer have a path to walk on and we have to change direction, that is where our higher low goes. So all we do is adjust this line to here. We can get rid of this path so it kind of avoids the confusion. This is our high, and now this becomes our higher low. So now we are bullish, but same exact thing applies. We have to adjust our lines to the most recent high and higher low. So do we body close above our high? No, but do we body close below our low? We do, okay? So this point right here is where we body close below. And I know what you guys are thinking, why are you not placing it here? Well, because this weekly candle is still open, I don't know whether this is actually going to body close, okay? So this is another thing to remember. Whilst it's still open, and over here we can see it still has 3 days and 6 hours left. If this was to close like this, then yes, this area would be slightly lower and it would be the lower low. However, because this is open, it can just kind of trick us and create a massive wick, and then we've kind of marked this as our lower low when actually it's incorrect. So at the moment, this area is our lower low. So once again, we've just gone from being bearish back to bullish to then bearish again. But same thing applies, okay? In order to be bearish fully and be valid, we do need both a lower low and a lower high. Same exact thing. Grab our brush, keep walking, keep walking, keep walking. The moment we run out of path and have to change direction is where our lower high goes. So it just happens that we are again in the same exact zone as before. However, that's absolutely fine. We can just simply adjust that to our lower high, lower low. We move our line to here and just simply wait and see. Do we break above? We don't. Do we break below? We don't know that yet, okay? So at this current moment, the weekly time frame is bearish. Now, we do the same exact thing on the daily time frame, okay? We have to find ourselves a high and find ourselves a low. Same exact thing follows. We grab our line, make sure to draw it at the body of the high and also at the body of the low, so we know exactly when we close above, when we close below. Do we break above or do we break below? This is actually a very good example because some people may get confused and think, oh, this wick happened before we body closed above the high, so it must mean that we have shifted bearish. However, if you remember what I was telling you, wicks do not count as a shift of structure, okay? Wicks count as retests, as all of that stuff, but they do not count as a shift of structure. It has to be a body. So this point right here is nothing. It doesn't count as anything. If anything, where the body is, that is classified as market structure. Because remember, when we talked about the line example, same exact thing. It's simply not broken above our high, not broken below our low. It's within the high and the low, meaning it is simply market structure. However, if we look above here, we did actually body close above the high, creating a new higher high. You already know the drill. We have to grab our brush because we have to find our higher low. So same exact thing, we keep walking, keep walking, keep walking. This area becomes our higher low. And this is a good example because it's kind of the first time that we're not in the same exact area. So all we do is grab this, we can circle this if you want to kind of have it clearer. Make sure you adjust your lines to this zone. In fact, I'm going to get rid of the path so it avoids any sort of confusion. Simply have to adjust this line to the high, 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 low, and the process repeats itself. Do we close above or do we close below? We actually body close below, okay? So this zone right here, ever so slightly, we did close, but it is valid and it still counts. This becomes our new lower low, okay? So again, we're shifting bullish, we're shifting bearish. However, it's taken a lot longer for price to shift on the weekly, daily, the 4 hour compared to the lower time frames such as the 15-minute and the 30-minute. So since this area is our new lower low, all we have to do is just adjust our line ever so slightly to the bodies, grab our brush, keep walking, keep walking, keep walking. Just happens that we are once again in the same exact place which our high high was. We can simply change that to our lower high, and now we are back to being bearish. Again, we don't seem to be closing above our lower high, which means we aren't shifting bullish. We are continuing to shift bearish. So where do we body close below our lower low? This area right here is where we body close below. And again, remember, you have to follow it kind of step by step. You can't skip to suddenly be like, oh, okay, we're currently here. Here isn't valid because we still have 5 hours and 42 minutes left. So we have to kind of take it step by step by step. So if this is our new lower low, all we do is adjust our lines to this zone. We can again get rid of this to avoid any sort of confusion. Grab our brush, keep walking, keep walking, keep walking. The moment we no longer have a path to walk on and have to change direction, this is where our lower high goes. And just a quick tip, in order for you to, I know sometimes people get confused and some people might not classify this as a change of structure because you can continue go. Well, the thing to look at is also, you can look at the line chart, right? The line chart is very helpful because it shows you clear structure. As you can see, there is a very clear change of direction here. It's not always super accurate because as you can see, this zone right here, let's see what it looks like on the charts, right? It has its own structure, whatnot, but make sure you kind of flick between the two to give you the best possible chance of knowing what structure is actually doing. Also, if we look, a valid shifter structure has an area of interest also that price bounces off of. So this one is absolutely valid because the line chart lines up, it has its own area of interest, and also the candlestick chart also looks good. But anyway, same thing continues, lower high, lower low, we end up body closing below. Once again, this area right here is where we create our new lower low, so we're still very much so bearish. We just have to find our lower high. So grab the brush, keep walking, keep walking. This area seems to be our new lower high because we have run out of path to walk on and simply have to change direction. So let's label this, grab this here. If this is our low low, lower high, once again, do we body close below? We don't, and again remember this is just a wick, it does not count as a shifter structure. However, we do body close above. Okay, so this area becomes our high high. So we have just shifted bullish. But once again, we do need to grab our brush and keep walking, just because we can't have a high high and a lower low. It just doesn't go together. So grab our brush, keep walking, keep walking, keep walking. This area turns into our higher low, and again all we do is simply adjust our zone. We can kind of tighten that up a little bit, move this to here. Do we body close above or below? No, we do neither of those things, which means that the daily time frame is bullish. Okay, so weekly's bearish, daily's bullish. Let's have a look at what the 4 hour is doing. So the 4 hour time frame, again we can pick our low and pick our high, do the same exact thing as always. Again, grab our lines, draw at the body of the low and at the body of the high to see, do we close above, do we break below, what is going on. In this instance, again, this is a great example. This is just a wick. This does not count as a shifter structure. If this was the body, then yes, but it is just a wick. However, if we look up here, we have actually body closed above our high, creating a new higher high. Again, you already know the drill. Grab our brush, keep walking, keep walking, keep walking. We no longer have a path to walk on and have to change direction, which means that this area right here can be classified as our higher low. The only thing left to do is adjust our lines just so they're in line with the body. Also move this slightly higher up, and the same exact thing. Okay, it's just a process, a matter of fact of following it step by step by step and going all the way up until you reach to the most recent price action and you have no shifts above or below. So again, do we break below? No. Do we break above? No. So currently we are also bullish on the 4 hour. So we're bearish on the weekly, bullish on the daily, and bullish on the 4 hour. I like where this is going because all we have to do is follow and make sure we have at least 2 time frames in sync. Okay, so let's have a look at what the next step is. The next step is finding your area of interest. Okay, an area of interest is simply just an area of support and resistance. It just has different names, but it does the same thing. In short, it's just an area where if price reaches that zone, it has to have some sort of reaction. For example, I like to say a valid area of interest has minimum 2 to 3 touches. So if we take a look at this zone, this is a very valid zone, okay, because it has a touch here, touch here, touch, 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 touch here. Okay, every time price reaches the zone, it has some sort of reaction. It's not like where price just completely disregards the zone and never pulls back or anything like that. It has to have a reaction. And since we know that the weekly time frame is bearish, we are looking for sells. And if you look closer, we are in the process of having that retest and rejection from this zone in order to be able to take the sells. But we don't just enter right away, because how will we know what our entry confirmation is? Where do we go? Because it looks like the move is already happening. However, there's still steps to follow that allow us to confirm that price is really looking to go lower and increase our chances of taking a profitable trade. This next step is one of the most important steps in the strategy. We simply wait for the shift of structure. Okay, so since the weekly is already bearish, as we analyzed, the daily and the 4 hour are both bullish. Okay, so like I said, we need 2 time frames in sync, but the weekly time frame is bearish, so we could take a counter trend trade, but in this instance we're not going to, because this area of interest is extremely valid and we are already having a push and a reaction towards the downside. So all we have to do is wait for the daily to shift bearish. Okay, and this is extremely simple. Since we identified our zones before, we already know that this area is our high high and this area is our high low. So the current shift of structure on the daily time frame is at this area right here. Okay, as you can see, it's making its way down now, but we cannot take the trade because how are we meant to know that the weekly pullback is finished? Okay, so now it's heading down, but like I mentioned, there's still 3 days and 6 hours left of the weekly candle, right? So this could very easily turn into a massive wick and have price retest the zone again and then have the push. Because if you don't wait for that, that's why we use the daily and the 4-hour, because it helps us identify when the weekly pullback is actually done. Now, if the weekly does continue to go lower, that will mean that the daily will also shift bearish. Same exact on the 4-hour time frame. As we know, 4-hour time frame, this area is our high and this area is our higher low. Just happens to be the same exact area essentially as the daily, right? So all we have to wait for is the daily and the 4-hour time frame to shift bearish, because that means that the weekly, the retest, is now done because it has fully gone back. There's not going to be a wick, it just is going to continue to go lower. Another great example is NZD CAD. Looking back at where we were, the weekly was very much so bearish, okay? This area was our previous lower low and this was our lower high, okay? So same exact thing, we just need that retest. But how do we know that that retest is finally done and price is ready to shoot down just the way it did now? Let me mark this area up for you guys so it's easier to see. As you can see, this is the 4-hour time frame. As the weekly is having its pullback, I know it looks a little crazy, but as the weekly is having its pullback, the 4-hour time frame continues to shift from bearish to bullish to bearish to bullish. And all we have to simply wait for is a shift of structure, okay? Shift of structure, break, retest to then sell. And as you can see, previously, this was our high and this was our high low. All we needed was price to have a break, shift bearish, retest, and that gives us a confirmation that price is ready to go lower. However, if we take a closer look, we did in fact shift bearish because we body closed below this higher low. However, if we get our lines out again, if this is our lower low and this is our lower high, we actually ended up shifting back bullish on the retest. This tells us that the weekly retest isn't done yet, okay? Because we need extra confirmation that the 4-hour and daily are both bearish and have that break, have that retest to allow us to know that, okay, the weekly time frame is done having its retest and we can look to sell. So we just wait. We did end up body closing below at this area right here. However, in order for me to take a position, it has to be a very clean break below and a much better retest, not something like this, because what confirmation do I have that price is actually going to go lower? I don't, because it's still hovering in and around this zone. It's not really doing anything. But if price has an actual movement, an actual push towards the downside, and then a retest, then I know, great. We are actually rejecting this zone, and looking back at this example, this is completely different because we're staying bearish with this being our lower low, this being our lower high. We have not closed above, creating no high, none of that stuff. We are very much so ready to go down, and as you can see, price continued to go lower and lower and lower. This area, the next structure point for your take profit, is a 1 to 4, but you could have held way longer. All I'm trying to say is the process of being patient and simply waiting will get you more wins and avoid you so many unnecessary losses. It really is as simple as that. All you have to do is stay patient.
And this is exactly what separates good entries from bad ones, because people aren't patient enough to wait for the extra confirmation, which seriously will pay off. You can't just enter when price reaches a support or reaches a resistance, because you don't know what's happening on the lower time frames. And those are the ones that actually give you the confirmation. Okay, so you know the strategy is based on the trend and simply the backbone is break and retest. You have to identify the structure, find your zone, wait for the break and retest. Very simple. But here's what's going to make or break you. Risk management. It doesn't matter how good your entries are. If your risk management is terrible, you will lose money. Here are my rules. Rule number 1, you risk the same percentage per trade. Whether you want to do 1 to 2%, higher, lower, whatever your percentage is, make sure you stick with it. Don't risk 1% on one trade and then you win and you get a little bit too confident and you think, okay, I'm going to up my risk and risk 3%, 5%, and then you lose the next trade, and you're not only in massive amounts of drawdown, it's going to be very hard to recover because you're going to get a little bit scared and feel like, okay, I need to lower my risk once again just because I've lost so much money in one single trade. But if you keep your risk, if you keep your percentage the same throughout, whether you win or lose, that's what's going to build you the consistency. Rule number 2 is make sure your risk to reward is a minimum of 1 to 2. For example, if I'm risking $100 per trade, I want to make at least 200, okay? This way, it gives me a buffer, right? So you know how I mentioned the percentage, it all links together. Because if I decide to risk 100 on one, and I make 200, which is a 1 to 2, and then I lose the next trade, I'm still up, okay? I still have $100 spare, just because my risk to reward is great and my risk management is even better. Having a 1 to 2 allows you to lose 2 trades and still be break even, okay? So you know how we talked about if you win a trade, you get confident, up your risk, you lose 1 trade and you're very much so badly in drawdown. With a 1 to 2 and a positive risk to reward, it allows you to lose 2 trades and it's covered by 1 single win. You need to make sure your risk to reward is positive, at least a 1 to 2. If it's more, even better, but at least a 1 to 2.
Rule number 3, your stop loss has to be set first of all, but when you're actually setting it, it has to be set at a previous structure point. When we're selling, we want to be placing our stop loss at a potential lower high. That way, if price decides to suddenly reverse on us, we are shifting bullish, which means we are 100% in the wrong, okay? This stop loss just happens to be a little bit tighter, but we don't have pips. There's no such thing as it can only be 20 pips, 30 pips. It doesn't matter. Pips do not directly correlate to your risk to reward. Just because we can take a trade that looks like this and a trade that looks like this, they are the exact same thing. If you looked 1 to 2, 1 to 2, okay, same exact thing. We're risking 100 on this one and we're risking 100 on this one, and because we have a risk to reward of a 1 to 2, that means on both of these trades we are making $200, okay? I know you might get confused and think, oh, why is this we're obviously going to make more money on this one because the stop loss is not only larger, which means our take profit has to be a lot bigger. That is correct. Stop loss is larger in pips than this one, but it doesn't mean a single thing. If you're risking the same amount, your stop loss can change. Anyways, back to the example, it has to be at a potential lower high when selling and at a potential higher low when buying. Another example on the 4-hour time frame where to put your stop loss. Again, it is at a previous structure point and a potential low high, so that if price does reverse on us, we are getting stopped out and we know that we are 100% in the wrong. Quick example on a bullish market, if our entry is here, make sure our stops are below the previous structure point and a potential higher low. Again, if price does decide to completely change direction and body close below, we will be shifting bearish, which means we are 100% in the wrong. Let me walk you through a trade that has already played out. This example is on GBP USD. Starting on the weekly time frame, we already know we have to make sure that we are very much so bearish. Indeed, we are. This is our lower low and our lower high is all the way above there. All we simply need is a retest of our area of interest. And how do we know what a valid area of interest is? It's simply a zone that price has a reaction from, i.e. support and resistance. Every time we reach the zone, we have a reaction, break above again, reaction, tap, same exact at this area. So since we know and we have our area of interest, we know that we're bearish on the weekly, we are looking for those sells. So if you remember, how do we know that this retest on the weekly time frame is done? Okay, the time frames such as the daily and the 4-hour allow us to say, okay, we need to shift structure. So we simply go down to the daily time frame, and as you can see, this is exactly where the weekly was having this retest, right? So if we quickly label it, if this is our lower low, this is our lower high, and we grab our lines and draw them out to make sure if we shift above, if we shift below, as we can see, we do not body close below, but we do body close above, okay? So this area right here becomes our new higher high, and the same exact thing, grab our brush, keep walking, this area again becomes our higher low. All we do, simply adjust our zone. We are still currently bullish on the daily time frame, so that means that the weekly retest isn't finished and isn't done just yet. Again, do we break below? We don't. Do we break above though? We do. This area right here is where we body closed above, which means this area becomes our higher high, but we have to grab our brush, keep walking, and find out where our higher low is, because remember, if we're bullish, we cannot simply have a higher high and a lower high. We cannot just have a higher high, we need also that higher low. So this area then becomes our higher low. So again, we are currently bullish. And do we break below? We don't, but do we break above? We do indeed, ever so slightly. This is our new and most recent higher high. Again, same thing, grab that brush, keep walking. Very small, but this is a shifter structure here, which does count as our higher low. So again, let's get rid of these to avoid confusion. All we really need, I'll keep this area of interest here for you guys to see, is a shift of structure, because we didn't body close above, but we need to body close below, because that will indicate that the weekly retest is done. And as you can see, we did have that body close below and shift bearish. But now we have to wait for another retest that allows us to go to the 4-hour time frame and again shift structure. So as you can see, we're having that daily shift. We are now bearish with this being our low and lower high. We're having this pullback, so that's the indication of that we can go down to the 4-hour time frame, and a beautiful break and a beautiful retest on the 4-hour time frame. Once again, stop loss above the potential lower high and targeting at least a 1 to 2 previous structure point on the 4-hour first, then the daily, then the weekly. I mean, I closed halfway through the move, but I was more than happy because we started to reach this structure point, so I was okay. But you could have held way longer, but it is just another great example for you guys to have a look at. Now, just a quick example of a valid loss would be on the weekly time frame. We are very much so bearish with a lower low and a lower high. As you can see, we are having that retest, and how do we know that the retest is done? Go over to the daily time frame. The daily time frame is actually still bearish, okay? So it has, this is our lower low, this is our lower high. If you see, we have not body closed above. All these wicks, they do not count as a shifter structure. It has to be the body. Same exact here, we do not body close below. And as you can see, the daily is having that retest, which means that we can go over to the 4-hour time frame and have a look. Do we actually have that break and retest, and are we okay to take the sell? In this instance, this would be our small area of interest. We do have a very small break below and a very small retest, which indicates, okay, we can actually look to enter the position here, although it is a little bit riskier for the exact reason of I was saying earlier in the video. I do prefer to have an actual massive break, then a retest, like something like this, so you know the price is actually ready to go down rather than it hovering around this zone. But it's just a great example of the stop loss, because this could have very easily played out if we look, you know, extra confluences in here, left shoulder, head, and then a potential right shoulder, break, retest of the neckline, very small. But if you did enter and place your stop loss above a previous lower high, potential lower high, then again we would have been stopped out, which meant that we're 100% in the wrong, right? So it's absolutely great, because our stop loss is very useful to us, because no, we didn't get wicked out and price didn't decide to be like, okay, I'm just going to push up higher, then decide to go lower. We actually got stopped for a reason, because price decided to have a massive push, shifting us bullish and completely telling us that we were wrong, which is absolutely great, right? This is a very good example to use as a loss for that exact reason. And I want you guys to understand that losses do also happen. They're a part of trading, but if we can avoid these losses, such as waiting for the actual cleaner break, cleaner retest, having our stop loss at a good valid zone, all of these things, following the steps, step by step, it will allow us to focus on the higher probability setups and avoid those unnecessary losses.
And here's what you need to understand about trading. It is already hard, so stop making it harder for yourselves, okay? Just keep it simple. You don't need to have 50 things on your charts. Just keep it as clean as possible.
And just a quick example of this, would you rather trade on the chart that looks like this, which honestly makes it hard to actually know and try and figure out where the current price actually is? Or would you rather have a chart that's simple and looks like this? You know exactly what you're waiting for. All it is a break, retest, to then sell. You know, you can have another box here if you wanted to, obviously pretend it's an actual valid. You can have that there. It doesn't really affect it, but you need to actually be able to see what price is doing. And if your chart is looking like this, you're just going to get confused and start taking random trades.
The only thing that I personally use is the 50 EMA, okay? It's no secret, it's just there for an extra confluence, and most of the time I forget it's there, okay? You don't need the Fibonacci, you don't need all this random stuff. If you want to trade it like that, you can, but you're just making it harder for yourselves, because a lot of people think that there's an indicator, it's the secret magic tool to making them profitable, but all you have to do is understand market structure, and the charts will tell you what they want to do next. All you need is higher time frame structures, clear zones, the structure shift confirmation, and risk management. That's it. No crazy indicators, no Fibonacci, nothing like that. But you have to actually follow the strategy, okay? A lot of people fail because they decide to jump strategy every time they take a loss. Trading is honestly 80% psychology and 20% strategy. The strategy could be the best in the whole wide world, but if your psychology is off and you simply can't follow rules, you will fail. You already have a system that works. It's your job to simply follow it. And before I wrap it up, I just quickly want to share the biggest mistakes that I've seen people make. Number one, trading time frames that are too low. People are trying to swing trade on the 5-minute chart, okay? The 5-minute chart switches more than even the 15, 30-minute, 1 hour, 2 hour. It's constantly switching to bullish, bearish, right? You saw how long it takes for the daily and the weekly to switch, even the 4 hour, right? It builds actual structure. Whereas if you're trying to hold for long periods of time, it doesn't work like that. Number two, not waiting for either shift or structure, okay? If all you need is the 4-hour break retest, which indicates that you need to have the shift or structure, anytime you have a pullback, anytime price reaches your area of interest, stop entering, okay? Because how do you know that price is done having the retest, right? You need the daily and the 4-hour in order to be able to understand that. Number three, inconsistent risk. Like I told you guys, if you risk 1% per trade, then get a little bit too confident, risk more, then end up blowing your account, you're in drawdown. Don't get yourself in that much trouble. It's simply not worth it. Pick one risk and stick with it. Number four, overcomplicating charts. Just keep it simple. That's literally all you have to do. Number five, switching strategies too soon. Just stick with one strategy and make changes. If the strategy works and the problem is you not being able to follow the rules, you changing strategies isn't going to help you. You have to just stick with your rules. By avoiding these 5 simple mistakes, you're already ahead of the majority of traders. And that will wrap it up. That was a full breakdown of my strategy. Weekly, daily, 4-hour break retest, wait for the shift to structure, proper risk management, and that's it. That's the system I use to make thousands every single month. And I just gave it to you. Now, if you're thinking, I want the exact entry checklist, the scanning process, and a community of people using this exact strategy, that's all in my community. The link is in the bio. I've had students go from inconsistently losing money for years to using this strategy and finding profitability. People with full-time jobs, people who thought they would never figure it out. But even if you don't join, take what I taught you today and use it. Go to the charts, practice your market structure, weekly, daily, 4-hour, wait for the retest, wait for the shift to structure. So go do it. Drop a comment if this helped you. Let me know what else you want to see next. Make sure to hit subscribe if you do want more trading content. Thank you guys. Take it easy. I'll see you on the next one.